Welcome back, folks. So we had the Dow Industrials finish down 91, NASDAQ off 2, S&P's off 1.5. Let's go over to our man, Mr. Jim Prince, as we do each and every Wednesday at 20 past the second hour. You can check out Jim every trading day, right, folks, at his website, Greatest Business on Earth. That would be gbemembers.com. Check it out. Great little website. Jim teaches the futures markets. Jim Price, what's going on, brother?
Hey, Tom, how are you today?
I'm doing.
Yeah, really good. A lot of action again in some of the markets here today, and it's really great. You know, it's sure a lot better than the slow doldrums we had during the summertime.
No, there's no doubt. There's no doubt that we have volatility back in the marketplace. So let's take a look at some of your charts. I have your charts up. Where would you like to start?
Yeah, let's start out with March Sugar.
Okay, cool. March Sugar. Let's see what we got here. Okay. Oh, look at this. We're getting a sweet tooth again, I guess, huh?
Yeah, we sure are. So you see the dotted vertical line that I have on the chart there?
Yes.
So that was the last time that I brought Sugar on your program here.
Okay.
And that was September 12th, and you can see it reacted at that resistance level and sold off and actually formed a double bottom. And since that low was put in there, the second low, boy, the market has really taken off. It is, I think, what's that, 14 trading days in a row, it closed higher, or not in a row, I'm sorry, 12 out of 14 days closed higher there, running right to resistance here today. And one of the things about this market is that once it starts to go, it can really trend, and it can make some big moves coming out of nowhere. And I think, today is a pretty good example of that. Margin, just so your folks know that one of the things with futures contracts, of course, you got to put up margin.
Sure.
And margin for the outright futures contract to trade, for instance, this contract is about $1,120 per contract. So I wanted to show kind of the difference between trading the outright futures contract and trading a spread.
Okay.
In sugar. So I sent over the May-October sugar spread chart.
Oh, nice. Okay, cool. Let's see. Perfect. Okay. Okay, good. Let's talk about this. Okay, cool.
Yeah, so this made, I call it's a 1, 2, 3 bottom. A lot of technicians refer to it that way. I have those, the pivots marked off over the little rectangles. And today it actually closed very strongly, breaking up above that upper pivot there and is headed towards that resistance zone. But the margin, for instance, to trade a contract like this particular spreads,
okay.
$187.
Okay, so line up the trade for us. So are you buying or selling the May and buying or selling the October?
Yeah, yes, correct. We're buying the May, we bought the May and we sold the October. So the plot you see on the right side of the chart is the difference between the price of the two contracts.
That's pretty amazing.
Yeah, so we're just looking for basically the spread to widen, and as the spread widens, then as it's plotted on the chart here, it'll move up, and it's heading towards that resistance level. So trading spreads is a great way to get involved with the futures markets. You still have the risk, but you can enter positions at a lot less capital, with a lot less capital.
And as it is, folks, just that when you brought that up at sugar, I hadn't traded sugar so long, man. I love trading sugar. Just to give you an idea, folks, that every penny, okay, is $1,100. That's the bottom line. And that 1,100 that Jim was talking about carries 15,300 with it. That's pretty cool, man.
Yeah,
and so on the spread, so as the spread widens, so we put $183 up. As the spread widens, what ends up happening, that 183 is going to double, triple, right? Is that how this goes?
Yeah, that's really how we're looking at it. So we're looking to actually, if the spread reaches up and touches that upper zone there that I have marked off, that red area,
yes,
then that's going to be our first target that we have in place here. And then as this new trend kind of gets underway, we'll look to add to these as well, because this is also a seasonal play that runs into March. So we may have a lot of room here going down the road.
Yeah, you definitely got a lot of room, man, and that's pretty wild, man. I love it. Okay, so what's next?
Yeah, so last week I sent over a chart of feeder cattle, November feeder cattle.
Yes.
And I just wanted to talk a little bit about that because of what it's done since we last chatted.
Okay.
And see the little red arrow that I have there? top side of the.
I do. I have it right here. In fact, I'll blow it up a little so everyone can see it. Yeah. Okay. Beautiful.
Yeah. So that was it's pointing to the candle that I was on your program last week. So that's where the market was at that point. And I talked about the divergence. I kind of have that marked with little trend lines going from high to higher high on price and high to lower high on the indicators.
Yes.
And so it came down to that support zone. I was expecting a little bit more of a reaction than we got here. We only had really a day, but again, filling in that ellipse that I had outlined there, that upper one, and boy, just a big sell-off. So that's a move, Tom, roughly of about $1,000 per contract from roughly the arrow on down. So pretty good move here over just the course of a handful of days, a week essentially, here in feeder cattle.
Now here, let's talk about so they can get the idea of because you have basically the live cattle. Right, and then the feed. So the feeder cattle, that's right before they get slaughtered, right? They put them in the feed. So they're two separate contracts, right?
Correct. So the feeder cattle are actually alive, and the live cattle are not.
Yeah, no, I'm with you, exactly. And so, like when something like this happens, right? If the price keeps going down, then they want to basically get these things done because they're tired of feeding them, right?
Yeah, that's about it. Yeah, and you can see here, this continues to move down here, and now it's coming into an area of support. I have another ellipse there marked off from today's low down to a support of my 89 moving average there. So I anticipate that will probably be filled, and then we'll see a reaction there and maybe come back up and test those prior lows.
Pretty wild, man. And next?
Yeah, so I also sent over a chart of the U.S. dollar Swiss franc.
Oh, okay. Where is that? Oh, okay.
Yep. USD CHF there.
Okay. 1 second. Sorry, man. Here, I'll get this thing. Where are you? USDCF. Oh, good. I got it. Okay.
So this market has made quite a run here to the upside and formed a bull flag.
Okay.
Just broke out of the bull flag today on, I think, pretty strong energy here. I've highlighted the indicators down at the bottom of the screen.
Yeah.
And so my indicators have turned up as well, showing that energy now, buying energy is now coming into the market. So I'm anticipating a push at least up to the horizontal line, and then we'll probably test that. You see it's been tested many, many times over the last several months. So pretty sure that, based on that history there, that the market will retest that and, react to it. So we'll probably take a little bit before we slice through it, but it could eventually slice through it and come up and test that red zone, that next resistance zone above it.
Yeah, we get a lot of action, man. I mean, it's going to get interesting here, and I guess, our broad markets, they didn't react too much to what the Fed had to say. The dollar went higher. But, I suspect as everyone's sleeping on it tonight, we'll see whether once they bring those, the currencies, because we know the currencies move these commodities, right?
That's right.
Listen, Jim, it's always a pleasure. Folks, Mr. Jim Prince, you can find him at gbemembers.com. You have a great one, a safe one, and of course, happy Prince Spaghetti Day.
All right, go Red Sox.
Go Red Sox, big time.
All right,
thanks,
Tom.
man. Stay right there. Come right back, folks.